You're listening to Let's Be Real with my beautiful wife, Tara Spinks.
Hello, and welcome to our next episode of Let's Be Real. And we have an amazing guest. Today, she is going to share all of her information, or as much as she wants to share with us. And she's going to give us some enlightening financial information that will help us be more, help us gain more stability with now and as well as in retirement, because that's something that a lot of people don't think about until it's too late. So I would like to welcome Saran to this episode of Financial Stability with Let's Be Real. Welcome.
Thank you, Tara. Definitely. I do want to thank you for allowing me on your show and being able to talk to your guests, right?
Thank you.
So,
it is needed.
yes.
So we're going to jump right in. And just to let you know, you guys who are hearing on a podcast, we also show it on YouTube. So we're playing to two different audiences. So we want to make sure that those in our podcast land can hear and really feel and understand what we are trying to convey to them. So we're going to start off by me asking you, can you just provide a little information on, why should we listen to Saran? What does she know?
Why should you listen to Saran? Because Saran is knowledgeable about the financial service industry. Thank God I was able to be introduced to the industry 11 years ago. I was able to get all my financial licenses in insurance, health insurance, life insurance, and the investment. So yes, you should listen to Saran because I am knowledgeable in that area.
Okay, great. So we know you have all your licensing, which means you went to school, you studied this.
Yes.
What have you seen that gives you that extra confidence that what you studied, what you know, can be actually applied in real life to help people?
So what impacted me is the fact that, I see a lot of our people, when a tragedy happens, right now, they go to GoFundMe, right? To help the family members to bury their loved ones. And it shouldn't be like that, right? So I would say I basically had my life planned out, right?
Okay.
I was like, I wanted to be able to, get married, have kids, have my home by age 30. And I did achieve that. However, I had someone sit down with me and actually talk to me about life insurance. And, it rocked my world with one question. That question was, if my husband died, what would happen to me, my kids, and my house? And Tara, I was speechless. I was completely speechless. Why? Because yes, I did have the house, I have the cars, I was married, I had 3 kids. But if my husband had died, I would have lost everything. Why?
Right.
Because I wasn't able to, continue paying all the bills by myself.
Right.
I depended on his income as well as he depended on mine. So if he had died, we did not have enough life insurance coverage to cover everything. So with just that one question changed my entire life. And now that I'm in the industry, I'm seeing the exact same thing with many families I'm sitting down with today.
So now what about when people say, because you mentioned life insurance can be used as that foundation, right?
Yes.
If one party leaves or dies, most people think of life insurance as just a burial tool. Like, I just need enough to bury the person that dies.
Right. And that is completely not true, right? Why? Because yes, I owned a house And at the time, my house was 200,000. I was only covered for 50,000. So God forbid, if I had died, my house he would have lost the house, and he still had to manage with 3 children and a job.
Right.
Now, on the flip side, if he had died, he was not covered. So if he had died, I definitely would have had to move back home with my mom with 3 kids.
Wow.
And I was not prepared for that. So yes, life insurance is not just for burial purposes. It's also to help you to pay off your house and any debt that your spouse is leaving behind, so that the family will not struggle.
Okay. So now let's take a stop at that point with the life insurance. Now there's whole life and there's term life. And without throwing people too far off in technical land, what is the difference?
Okay. So term life is exactly what it says, term. It is for a specific number of years. Some companies have up to 20 years, some companies go to 30 years. And then you have whole life. Whole life has a saving component, right? So the difference with whole life and term is that whole life does have a saving component that, unfortunately, if you die, the company keeps. So
whole life, if you die, you get nothing back.
As far as the saving, no.
Right. Okay.
You just get the life insurance component. So if you think about it, it's basically term.
Okay.
It's just that it has a saving component.
Okay. So the saving component is beneficial at what point?
It's beneficial only when you're alive.
Okay.
You can borrow
so I can
it.
pull money out of it.
You can borrow it, yes.
Okay.
But you do have to pay it back. Now, if you
Okay.
don't pay it back, then the company will deduct it from your life insurance face amount.
Okay.
But once you die, your family does not receive that saving component. The company keeps it.
Okay. So with both, the only benefit that I see is with term, if the term is 20 years and let's say it ends when I'm 68. At 68, I've paid insurance for 20, 30 years, and now I get nothing because it's done.
Right. So when life insurance was created, it's not an investment. It's just in case if something happens. It's just like your auto insurance, right? You've been driving for 10, 15 years. If you never got into an accident, you get nothing back. It works the same way. It's just in case if something happens.
So now let me just say this. We keep it real.
Yes.
Would it make more sense to just open up an investment account, a conservative one, and just start adding money to that? And let's say if you had a life insurance policy worth 200,000, you can actually save up 200,000.
Yes, that is what we would like to think, but life insurance is just in case if something happens. So if you take the life insurance and you put it in place, God forbid if you die tomorrow, you weren't able to invest 200,000 that quick, right?
That's
because
true.
in investment, money takes time to grow. So that's why you need that insurance for just in case, but at the same time, you're investing so that if you do not die too soon, you still have your investment.
Okay. So I shouldn't look at it as if I've just thrown money away for 20 years because I've outlived the term of my life insurance.
Absolutely not.
So
Absolutely.
I should do both. I should have life insurance and I should have an investment. So if I outlive my term insurance, I will preferably have that money that I've accumulated over the last 20, 30 years to kick in just in case.
Exactly. That was the whole purpose of insurance. For just in case if you die too soon while you're accumulating wealth.
Oh, I like that. That has never been said. I like that, Saran. So I don't think anyone has ever said the two go hand in hand. It was really, you need to get life insurance. You need to get it, if you die. But no one has ever explained that term part because a lot of people are living longer. And if you outlive your insurance because no one told you, you know, when you hit 68 or 70, that may be it.
Right.
And at 68 or 70, it'll cost you an amazing amount of money to get insurance.
Absolutely.
You need to be building wealth at the same time.
At the same time, exactly. And that's the concept that we all need to adapt, right? Where, yes, you need your insurance, term insurance, preferably, because it's cheaper, right? And at the same time, you invest so they go simultaneously, right? Because we know that in your younger years, you have a lot of debt. You have your children, your house, and your bills. At the same time, a lot of people don't have enough saved. So at the same time, you have your insurance and you have your investment going at the same time. Just like you said, you know, if you do outlive it, you have your investment. But God forbid, if you don't outlive it, now your family has the life insurance and they have the investment.
So do you think from what you've seen, most people are ready for retirement?
Tara, unfortunately, no. 95% of the working class will retire dependent on either the government, a small 401k, or a family member.
Really? So now this is let's be real. In looking at the different demographics and people that are listening, when we see our people, we're both Black. So this is what we mean. So we're keeping it real. Are we more prevalent to not be ready, more so than our white counterparts, our Hispanic or Asian counterparts?
Yes. And that's because we're not knowledgeable, right? So there's information out there. 9 out of 10 times people don't go seeking. You know, it's in the good book. Seek and you shall find, right? Most of us don't go seeking, right? So that's why with us, it's I do see a lot of our people not ready, right? That's why the statistics are so high where, you know, by age 65, 70, and just like you said, people are living longer. You know, 65, 70, people are not ready for retirement financially, right? Why? Because a lot of people are living for the now.
Right.
As opposed to living and thinking about the future at the same time.
Right. Because most people feel like, well, what if I don't make it? I want to enjoy life now.
You know, you can enjoy life now, but also prepare for the future.
No, this is true. And because, like you said before, with car insurance, with life insurance, there's a chance that you will live a long life. And if you have all your fun now, what happens when you're in that age? Now let's look at the flip side. What if I do everything I'm supposed to do and I have a nice amount saved up, but I get sick? Some people feel like, you know, damned if I do, damned if I don't. If I have a home and 401k and I get sick, that nursing home is going to take everything I have. So
right. But if you plan for your future correctly, and God forbid if you do get sick, instead of going into a nursing home and them taking everything that you have, you can actually have a nurse come into your home and take care of you, where you do not have to leave your home at all.
That is something. But if you depend on the government, again, you're going into
poverty.
Yeah.
Right. Because they will take everything that you own so that you can go into the nursing home. But the question is, how well will you be taken care of in the nursing home, as opposed to you being in your own home and having someone come in, or even having a family member take care of you that's getting compensated at the same time?
This is true. So now let's jump on the total opposite end. What if I'm just starting out, 21 years old, I have a decent job, but I'm 21. You know, the club, Miami's calling, the Caribbean's calling, my Gucci bag is calling, like, you know.
We were once 21, so we are well aware of what a 21-year-old thinks, right? However, so I had the pleasure of raising two young ladies, right? Because of the knowledge that I have, I was able to arm myself financially, right? So because of that, I was able to have my daughters start investing at age 16 once they started a job with as little as $25 a month, Tara.
Wow.
So by the time these girls hit 21, it was easier for me to say, okay, it's time to increase your investment as opposed to now starting an investment, right? So they started at age 16. Once they got their little job, I'm like, okay, $25 every single month. We're going to start investing for your future, for your retirement. Right? Why? Because as parents, we would like to see our kids do better than us.
Yes.
Right? So at age 16, I started them investing $25. 21, I said, okay, let's increase it to $100. Now my oldest is 24 years old and she's able to now invest $500 every single month into her retirement. Why? Because I always tell them, I may not be here.
That's right.
But you will thank me that mom started me out investing at such a young age. And it's not because I'm smarter. It's just because I was able to get that knowledge and then I applied it to my life so that now my kids will be able to do the same.
This is true. So now, but a lot of young people can't understand the retirement aspect because they can't touch it.
Right.
So is there something that they can do where they can save better than the 0.000001 in a bank and be able to save more in the now? And because sometimes it's harder to get them to understand retirement at 21.
Right. It definitely is. Why? Because at 16, it was hard for my girls to, wrap their minds around 65, right?
Because
they're
30 is a lot for them.
Right. Right. So, but I was able to get them to see the bigger picture, right? Yes, I had them save $50, but 25 went into a savings. Well, for just in case if they needed something. And then 25 went to the investment for the retirement. So I was able to show them, okay, we can do 25 into, okay, in 5 years, if you do need money, you have it. Right? But also at the same time, yes, you do need to start saving. Why? Think about this. Look around your community and see if the examples that you have is if that's what you want your life to be at 65. If it is, do exactly what they did. If it's not, then yes, you have to do something different. And that's in your younger years, think about in the future. Put yourself at age 65. And if that's where you want to be, then continue doing exactly what you're doing. If it's not, yes, something different has to be done.
Yes. Okay. So my daughter is great with it. She listened to Dave Ramsey and, she's applied these different things, again, getting different knowledge base from different financial people who are, either podcasts or YouTube or what have you. And she's actually doing what you said. She's, saved up. She's putting in different vehicles. She budgets well. My son, on the other hand, still got to work with that one. But hopefully he will listen to this and understand more of, the why I say don't only think for now. And that's a great segue into my next question. Saving for now, living in the now does not allow you to even do an emergency fund. We just had this storm. Perfect example. If something happened in your basement and you don't have, you're going to go to credit cards, which is going to put you in more debt, or you're going to be trying to wait for FEMA, or, you're stressing now about how you're going to fix something or add something. If I'm barely making it, how can we tell somebody you got to have $2,000-$3,000 in an emergency account? Or maybe now 5.
Right. So you can't only focus on now. Why? Because life has a lot of bumps in the road, right? We have a lot of ups, we have a lot of downs. So it's wise to, yeah, you can live for now, but also think about the next 5 years or the next 3 years, right? So what I do is I do teach all my clients how to have an emergency account. And you can start with as little as $25 a month, where you're putting away $25 to invest just in case if something happens. You're not thinking of, oh my God, where am I getting this from? I'm going to have to dip into my 401k. A lot of people have touched their 401ks for emergencies and they're being penalized. Why? Because it's a retirement account and they have not paid any taxes yet. So what you want to do is, yes, save in your 401k, but at the same time, have an emergency account that, God forbid, if something does happen, the car breaks down, your basement floods, you need a new car, that you don't have to think about your paycheck. You always want to have that cushion where you're saving at least two, three, four, five, six of your monthly bills, so that, God forbid, if something does happen, you're not pulling all your hairs out of your head.
That's right. Or like you said, depleting your 401k or,
Right.
anything like that. So what if though someone says, but Saran, like I'm living paycheck to paycheck. Where am I going to get this emergency savings from?
Okay. So what we do is we usually look at all their expenses. Sometimes people have auto insurance and they've been with the company for 5, 10 years, right? Now we come in and it's like, okay, let's see if we can save you on your car insurance. So
Mhm.
now with that savings, we take and now we create a whole new avenue of income, where now instead of you coming out of your paycheck, you were able to save in that area. So
Right.
we always look to see areas that we can save you money, where now you can start an investment.
Okay. So it's not like you're coming up with extra money. You're just finding a way with whatever you're spending now, how to use that money in a smart way to make it work for you.
Exactly. Yes.
Okay. Okay. I see. Let's see what else we have. Because it's hard. I think a lot of people are so used to saying, I don't make enough to do that, instead
Right.
of finding a way to make it
Right.
happen.
Right. So a lot of people are programmed, and not programmed in a good way, but in a way where they're always in lack, right? Like, God created us for abundance. But if we're continuing to think lack, 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 that's what we're going to continue to invite into our lives.
Mm,
So
that's
we
so
have to
true.
start thinking abundance, right? Once you start thinking that, now you're putting yourself in a resourceful state of mind, instead of I can't do, I can't have, I can't be. Now it's, yes, I can have, I can do, I can be. So
How do
once you get
we
it,
how do you retrain? And sorry for cutting you off. How do you
okay,
retrain a community that will buy Jordans, even if you figure like, okay, but I got them for a discount, or I got it from the outlet, that my exterior takes precedence over being financially stable. So I want to get it. This community is horrible. I need to get out. We don't have money. We don't have this. Like, we verbalize a lot of issues, but
mhm,
we don't grab hold to the solutions as easy as we complain about the issues.
right. And that's because we are programmed and we're not knowledgeable, right? So I know a lot of people have heard knowledge is power. Knowledge is power only when you apply it, right? So you can have all the knowledge in the world, but if you never apply it, you're going to be in the same situation. So I definitely thank you for what you are doing here, so that we can reach the community. It's
Yeah.
not going to take a day. It's not going to take a week. It's not going to take a month or a year. It's just something that we have to continually do. put it out there, reach out to people. Each one, teach one. I teach you, you teach someone else, that person teaches someone else, and it just continues. Why? Because it's your mindset. If your mindset is in poverty, you're going to stay there. Lack, if your mindset is in lack, you're going to stay there. So it's our job to bring this to the community, and not on a one-time basis, but a continual basis where we can reach more people.
Well, you know what? She said it all. She said it. I thank you for those parting words of encouragement, of enlightenment, and to motivate those of us, including yourself, that speak to people and feel like you're butting your head against a wall, but to keep trying and to keep doing, and not to get frustrated. So, to our Let's Be Real audience, especially if you have a family member, a friend, a neighbor, coworker that, you see just not taking care of business when it comes to their finances, when it comes to the health and wealth of their family, just give them a nudge, and don't get so frustrated that you're like, oh, to heck with them, because God did say, renew the mind. So that means daily we have to do something to continue to remind ourselves how to think. So if we have to do it personally, we have to understand that it happens externally as well.
Yes.
So I thank you, Ms. Saran. I have been trying to get her to do this for years, and I am so appreciative, because I do believe that timing is everything. And right now is the time that we need to have this conversation, and we need to continue. So listen, share, comment on the podcast. It will be on YouTube, and it will be on various platforms, Apple, Spotify, SoundCloud, as a podcast. So again, thank you, Saran, and stay tuned. Let's be real.
Thank you.